Welcome to The Explainer. Today, we're tearing down one of the most misunderstood concepts in trading, supply and demand. So many traders think they've got it figured out, but they're making some critical mistakes. We're going to deconstruct those common pitfalls and show you a much more systematic, professional way to look at the markets. All right, let's jump right in with this core paradox from our source material. On one hand, supply and demand is called a 50-50 game, basically a coin flip. But on the other hand, it's the very engine that makes the entire market run. So, how can both of those things possibly be true at the same time? You know, this contradiction right here is exactly where so many traders get stuck. They learn how to draw these little boxes, these zones on their charts, and then they just get completely frustrated when price blows right through them over and over again. So let's unpack why this idea is so tricky. Okay, so here it is, the number one mistake. A trader marks a supply or demand zone, and then they operate under the assumption that the second the price touches that zone, it's an automatic, guaranteed signal to buy or sell. This is a huge and frankly a very expensive misunderstanding of how these markets really operate. And this really leads to a crucial question you have to ask yourself. Is your strategy actually based on professional analysis, or are you just placing a bet on a location on a chart and hoping for the best? Because the difference between those two is, well, it's everything. What I love about this slide is how it frames this choice. The gambler, they see a zone and they just act. Boom. They've already decided what the market should do. But the pro waits. They know that zone is just an area of interest, and they wait for the market to give them more clues, more information, before they even think about putting on a trade. And look, our source is crystal clear on this. If you act on a zone without some other signal, without some kind of confirmation that the big money is actually on your side, you are literally just flipping a coin on every single trade. Your odds are no better than random. Okay, so if the zone itself isn't the real signal, then what is? Well, this leads us to the key concept, the missing piece of the puzzle for so many traders: price action. And this, right here, is the big aha moment. Price action is the market's language. It's the story that the candles are telling you, right now, in real time. It's the thing that tells you whether your trading idea about that zone is any good, or if the market has totally different plans, and you should just stay away. So the crucial mental shift you have to make is this. Stop thinking of the zone as the trigger. The zone is just a location. It's a point of interest where you need to start paying really close attention to the story the price tells you once it gets there. All right, so this leads us to the professional solution. And it's not some magic indicator, it's not a secret formula, it's a systematic method that goes way beyond just drawing boxes on a chart and crossing your fingers. So instead of just zone trading, the pro method uses a 3-layer confirmation system. First, you analyze the big picture, the overall market structure. Then, you confirm the trend and you look for what's called liquidation. That's when the market makes a specific move to take out other people's stop losses. And only then, after those first 2 boxes are checked, do you drill down to a lower time frame to look for a specific entry signal. And this slide just nails it. This is the fundamental shift in mindset. You're moving from relying on a single, kind of flimsy trigger to using a complete multi-step system. You're building a high-probability case for a trade before you risk a single dime. Now, while confirmation is always king, our source does highlight 3 specific types of zones you should really be watching. You've got statics, which are your classic, clean, horizontal support and resistance levels. Then there's inducement, which are those tricky little price moves designed to bait traders into bad positions. And finally, the 2-number zone, which is all about the area around big, psychological round numbers. These are the places to watch like a hawk for potential setup to form. Okay, theory is great, but let's see how this multi-layer confirmation approach actually plays out in the real world. We're going to look at 2 recent case studies from the Indian market that really bring this whole thing to life. First up, let's take a look at India's Nifty index. The analysis here wasn't about just finding some random zone. It was about reading a major shift in the market structure that was pointing to a pretty big move up. So after a structural buy shift was confirmed on the daily chart, the analysis gave a super clear potential target. The market structure was screaming for a move to 26,800, maybe even up towards 27,000. And this wasn't a guess, right? It was a projection based on that confirmed change in the market's behavior. All right, next up, let's look at an analysis of the tech giant Infosys. This is another fantastic example of how reading the context of the market structure is so much more powerful than just spotting a simple zone. And I love this insight from the source. A lot of traders would see a weekly supply zone coming up and get nervous about buying. But the professional view was totally different. Because the overall market structure was so strong, that supply zone wasn't seen as a brick wall. It was just a speed breaker on the highway to higher prices. So what does this deeper level of understanding get you? It gets you a trade with a potential 1 to 15 risk to reward ratio. I mean, that's just massive. That's the kind of opportunity you only find when you look past the obvious zones and you trade the entire story. So look, if you only take one single thing away from this whole explainer, let it be this. It's time to evolve your trading. Stop blindly trading zones. Start demanding a process of confirmation and start trading complete high-probability setups. And that leaves us with one last question to think about with your own trading. The next time you're looking at a chart, ask yourself, am I just betting on a location on the map, or am I trading the market's confirmed real-time story? Believe me, the answer to that question will make all the difference.